Hello everyone, and thank you organizers of Skolkovo Startup Village for being able to feel ourselves like video bloggers. Today we are interviewing managing partner of Leta Capital, Chachava, and I'm Maxim Ginzhuk, founder of Double Data. And without any further ado, let us jump right into it. You had 3 deals last month, and that is considering the fact that many angels and many funds do not invest. They put their investment on hold. What is this investment? Are those last year rounds? Or are you actually investing? Hello, everyone. I keep on investing, and lately we've been investing more actively than before because our funds believe it is paramount to invest in everything that is happening right now, in remote work, in digital business processes, in remote advertising. This is our fund's vision. Against our current backdrop, many people have to switch to 100% remote activities. People have to work 24 hours a day to satisfy the demands. Do you believe that it is important not to turn a blind eye to companies and startups from the hardest hit sectors? Can they be reborn as phoenixes? We look at various companies with a special focus on what we call COVID-positive companies, and those are companies who profited from this lockdown thing. We have both COVID-neutral and COVID-negative companies in our portfolio, and we are actually looking very closely at COVID-negative companies, those that are hit the hardest by the crisis, but who nevertheless managed to make it, managed to redesign their product to become a COVID-positive company. Just one example from our portfolio, we had this company that designed software for classic retail. Now retail is not thinking about innovations, but this company, they fully reconsidered what they did, and now they offer software for servicing clients, e-receipts. Those are the things that any retail companies needs right now. And that was the only chance for this company. The other option was to shut down altogether. And now, this new updated product of this company is something that everybody needs. Okay, so everything is online now. We've been on lockdown for several months. Have you closed any deals online? I did. Actually, I did it in autumn 2013. So you were prepared, I was. And we've been actively using Zoom for a couple of years now. And I'm a board member of an American company, of an Israeli company, and we've been holding online board meetings for quite a while now, maybe for 5 years or something. Before, of course, I was also a frequent traveler, but now all of our boards are in various locations across the globe, and we have no other choice but to go totally online. Normally, we would send our founders to target markets. Now we don't. And today I'm willing to talk to people who are, say, in the US and who are developing their startups there. It is not a problem for me to connect with them via an online platform. You have Leta.vc platform, and you've launched your own blog. You publish many interesting materials for entrepreneurs. And in April, you published a manifesto of your venture fund. What is that? Could you elaborate on that? Yesterday, Startup Village held a wonderful after-party for investors, and we've been talking about how Russia's market should follow in the footsteps of the American market. They have an NVCA association that came up with an ethics charter for funds and startups. And that is very important because we speak so much about trust and openness. And here in Russia, the market is on the brink of doing that. In February, we disclosed the results of our work. We discussed disclosed the information about our investment, about our profit, to make it as transparent as possible. And this manifesto sets forth all of the necessary information about us, about who we are, where do we get our money from, what do we expect from startups, what is our decision-making process. So what you are saying here is this manifesto answers all of the important questions about your startup. Indeed, and everyone who wants to work with our fund really should read this manifesto, because this manifesto is a very important paper that features all of our visions and ideas, and I believe that if we had a lot of like-minded startups, then our market will be more efficient and more transparent, and people will make more money, isn't that? Indeed. This is the target of our investors. Alexander, today we're speaking about how we can raise capital working with venture funds. Let's speak about that. What should a company be like for a venture fund to invest in it? Leta Capital invests in companies that are global market oriented. If a company only operates in Russia, if it cannot be scaled globally, then we won't be able to make our tenfold profit. That's your answer. We are looking at IT companies, at software companies who are selling globally. What about their returns, their product, their team? Formally speaking, we are investing in companies who have their proof of concept, who have their sales. That is very important for us. So we are looking at $30,000 per month and higher, and we need to see that the sales are growing. We need to be sure that, say, in 6 months' time, they will have 100,000 and not 30,000. And what about companies who don't have enough people on board, whose product is not yet ready? So I'm referring to companies who do not meet all of your requirements. Does it make sense for them to get in touch with you? We are ready to get in touch with any startup who meets our main criteria. If they're working on a software project, on a global product, they still can get in touch, even if they do not sell their product yet. But we will be able to consult them, we will share our expectations with them. We'll tell them what they should do in order to make their product attractive for their investors. Sometimes we tell them, you need to work on your team. Sometimes we'll tell them, guys, you need to grow, you need to get to a couple of markets more. So we give them this feedback, and we look very closely at this startup, and they would send us updates, and at some point we might invest in them. Let us talk facts. How many of such companies have you invested in? So the 2 deals that we closed on online education market, one of the companies is called MyBuddy. We've known them for 4 years now. They've been doing a different project back then. Then they switched to a different product that was more compatible with our goals. And we tell them we needed them to grow a little bit more. And as soon as they started selling, we realized that, yes, they meet all of our requirements. And our decision-making process was very quick because we known them for quite some time. Same goes for a second company that we closed a deal with. We've been following them for quite some time. We communicated with the founder, and that was crucial because we saw the way company changed, the way the founder responded to challenges, the way they overcame all of their problems. We saw all of that, and we saw that their sales were growing. And as soon as they entered our stage, we closed the deal very quickly. It only took us a month. That's normal when you follow a company for quite a while. So it will make sense for early-stage startups to get in touch with us. As far as I understand, you have more than 20 investments. How many of them were early-stage startups? Around half of them. So it helps for early-stage startups to get in touch with us as soon as possible, because we really like to follow a company for a while, to look at them, to look at the way they change. That is characteristic of every venture capitalist. We like to learn more about a company before we invest. Many entrepreneurs, beginners, they do not know anyone from this venture world, and they do not know how to speak about their project. What they should do is that they should go on our website, they should read our manifesto, make sure that they are what we are looking for. And we have our feedback form, and we read all of the messages that we get through this feedback form. They can write us there, or they can use our email address, and it makes no difference whether somebody recommends us a startup or whether startup contacts us directly. But they need to get in touch with us, and they need to persuade me to invest. That's quite unusual to hear that a venture capitalist reads emails. But let us talk figures. How many companies received funding from you after having written you an email? There were several companies. One of them actually sent emails to various funds, and we invested in them, and they've been very successful. They've recently raised a new round of investment from American and European funds, and their story is that of success. Their returns are very significant. There are a couple of projects more that simply wrote to us on Facebook, via email, and we kept in touch with all of them. So it works. In case of your fund, it works. It does. Indeed, if, say, a unicorn founder recommends us a startup, it's even better. That is more effective. But if you, as a startup founder, do not know any people from the startup world, do get in touch with us directly. I mean, a Harvard graduate stands a better chance than a graduate of some unknown Moscow university, but still, everyone stands a chance. Startups who already had some experience in communicating, in negotiating with a venture fund, often face this difficult situation where they do not hear a direct no from a venture fund, and they cannot understand where this whole thing is going. What do you do? It is not very polite to say no in the Western culture, but we know how difficult it is for the majority of founders to raise funds. I do not know a single founder who likes to talk to investors to raise funding. It takes a long time. There are lots of questions. No one likes to talk to investors because normally it diverts you from developing your business. So this painstaking process is something that we're trying to make easier. If we're not seriously interested in a startup, if there is something wrong for us, we will refuse to invest directly in order not to waste the time of this startup, and we will directly tell them what's the problem. But if we are interested, then we'll also communicate that to the startup, and only if we're interested we will proceed, and we will inform them that yes, preliminary we are interested, so do not worry, you won't be wasting your time with us. But even if we refuse a company, we will give them some significant feedback. We will tell them what exactly we did not like, and we will tell them, try and change that, because the chances are other venture funds won't invest in you either. So if you improve here, here, and here, get back to us. And in this case, startups will understand what they should do in order to raise money from other venture funds, or say they will understand that they should address business angels rather than venture capitalists. And when we give this feedback, smart entrepreneurs, they learn from this, and during their future negotiations or talk with other investors, they will stand better chances of raising investing. For example, if a founder has given 70% away to business angels, we will make it clear for them that they won't be able to raise any funding from a venture capitalist because the founder only owns 30% of the company, and no venture fund will be willing to invest in such a company. Because the mission of our fund is to help entrepreneurs, startups, regardless of whether we hold a share in their equity. So that is what we're trying to do. We try to give them a substantive answer. It is better to be tough than not to say anything in particular.
Sometimes we talk about investments, and when we talk about early entrepreneurs, there is a special sector which is called self-made entrepreneurs. They've got a business, they got a global business with $3 or $5 million revenue. Is there any sense to go for venture capitals? Why do they need to attract venture funds? It's a very good question indeed, and such entrepreneurs are quite a lot, especially Russian-speaking ones, because they just met, they built a business, and it's proven, it's profitable. But if this entrepreneur just wants to to earn a managerial salary, they don't need us. But if they want to build a bigger company, venture fund is the right thing to go to, because we can attract additional resources. And on the global market, they probably compete with startups who attracted dozens or hundreds of millions of dollars, even if their product is 5 times better. Nonetheless, $2 million more would be a good idea. And sometimes, without venture investments, big business isn't possible. It will either take you too much time, or you won't have enough resources. So it's all about timing. Moreover, good investors, they help you with the strategy, with the ongoing fundraising. And if this company is entering Western markets, it's like a kind of benchmark, a standard when a good growing companies have venture investors and banks. It's very good for banks and for their partners, because they see that a company is proven by another good, transparent funds. It means that a company has some money, they have some compliance, due diligence, and so on. And all these things is a must, especially when it comes to B2B sector. So venture investments are useful not only in terms of money, but in terms of other things that you cannot live without while building your global business. So to wrap up, it's a choice between I remain a middle-sized company or I will try and become a market leader. Yes, it's a very good formulation. What kind of mistakes did you see from among those entrepreneurs? Well, talking about delusions, I think they are decreasing. 5 or 7 years ago, such entrepreneurs told me, like, I give you one finger, you will tear off the whole hand, a bad guy will take away my company. Now they understand the difference between private investments and venture investments, good investments and bad investments, and they understand the help that they can get from the venture funds. Now they understand that fundraising is a very time-consuming and boring process. I would rather spend this time on marketing or sales, or I can go to a partner. It's a very decent approach. So we are there to make fundraising easier, to make it more understandable. So we have built a fund that is entrepreneur-friendly, and we are trying to make our communication with them to be comfortable and helpful. So if you don't want to spend too much time, just talk to us, not only about investments, but maybe about your company's strategy. And next, maybe we will come up with some investments issues. So to make it even clearly, we will make something like a flash interview. What is important for you in companies and entrepreneurs? Quick question, quick answer. Interesting industries: SaaS, VR, AR, edutech, AI, whatever you think about it. So all this, everything with including machine learning and so on. What about no-go? No, actually we take a look at different sectors like B2C, cybersecurity, fintech. It's a no-go, blockchain, no-go, probably. Well, it's better just to send some information to us and we will sort this out. Sort this out. How much money can you give? From $1 to $3 million. Never more. Sometimes we always try to do full-on. So we can invest up to $10 million. We've got some cases. So the average check is around $3 million. But in total, you can get up to 10 million, which is a rare case, but up to 5 million for certain. What about your cooperation with investors? Sometimes we lead, we try to cooperate with venture funds, smart venture funds. Your target share from 10 to 30 shares, 30% shares. Anything about control? We do not invest into founders. We always support them, but we never intervene into their operations management. So we try to be in their board and to act like advisors. Local projects attracts money to go to a global market. Will you give them money? I would probably ask for a proof of concept to show some customer bases, to show some first steps, not to move to a different country, but I have to know how your company is perceived by other customers. Because sometimes you are seeking international markets, but you got a local product which doesn't fit us. So you have to have a kind of traction, certainly. And you don't have to pay a lot to get this traction, because we see a lot of companies, even from Moscow or from Kiev, that sell their products abroad. Yeah, it's like they say we don't have lead generation. Yeah, what I do, I am generating leads for them, like 10 leads per day, no problems with that. What can be neglected, what can be ignored, and what should be in focus while preparing for the meeting with you? I think that you have to pay special attention to your story, because a venture fund will not invest into you without a big story about your company. So a founder should have a story in their heart. And the details can be covered later on, like reporting, dashboards. This can be downloaded later on during due diligence. But I have to understand your story. I have to see belief into their stories. This is the underlying thing. How much time does it take from preliminary meeting to term sheet? I would say that in perfect case, in ideal world, a couple of months. In other cases, it depends. Sometimes entrepreneur can make a break in our communication, like I got it, I'm not ready, I will get back to you later. Sometimes we say we are not ready, or we say you are not ready. So it can be more, it can be less, but it's around this. So with Double Data, we closed the deal after 2 months. But we spent 12 months to communicate with them. The fastest deal, my fastest deal as a fund, I think 1 month. There are cases when a company gets to you very similar, that fits perfectly our profile. They've got some background, they have due diligence results, they got everything in place. So and everything is ready, documentation is ready, due diligence is over. We just need to take a look at the documentation done by our colleagues that we know and that we trust. And after this, everything happens that quickly. 1 month, maybe 5 weeks. A philosophy question. A successful startup is when you do everything right, or it's when you go through mistakes and coincidences. I think that a successful startup is when you do something wrong, and it was like going out of your comfort zone. If a startup does everything correctly, you are just following the flow of the right companies. And they just occupy one of numerous roles. In such situations, corporates earn more, or an American startup that attracted to $1 billion. It is possible to build an average company by doing this, but not a successful company, big successful company. Yeah, it's like a sequence of wrong steps and coincidences, because yes, you have to forecast what will happen in 3 or 5 years. You have to have a clear vision. You don't live in this day. Startup is all about the next day. 3 main business characteristics. business or an entrepreneur? Both of them. Well, entrepreneurs, when it comes to entrepreneurs, we take a look at their team. Team is our top priority. Timing, target market, second thing when it comes to business, and dynamics, if we're talking about business, an ability to quickly adapt, to be flexible and agile, to know how to make decisions quickly. When it comes to entrepreneurs, number one is commitment, your belief, your readiness to sacrifice everything. It's all about commitment. Second thing, well, talking about commitment, almost all founders, when they pitch their startups, they say, yeah, let's go on, I will conquer the world. Is it about this? Yeah, exactly. But not only this thing, because at 2 p.m. we will have a separate interview with founders, and it's all about psychology, about mentality of entrepreneurs. It's all about the vital virtues. And when you talk to a person during 2 hours about their details, what do they think about expert, when we talk about their family, about their relations, about their teamwork, I think that in 2 hours we can understand who is in front of us, and we can understand whether this person is sincere and whether they trust in themselves, whether they will continue to act like this. And of course, then we will talk to their colleagues. It will be something like a cross-check, and I recommend entrepreneurs and founders to cross-check our funds too. You can talk to our portfolio companies to get some information about how we work, how we behave, are we good or are we bad. So half of your portfolio called me and asked me, how do you behave in this or those situations? Because it is very important, it is very serious. Everyone understands that funds are very serious about startups, but sometimes startups get first money. What they need to pay attention to when they take a look at the fund? Well, I think that investors killed as many startups as founders did, not just because investors are bad. Of course, there are bad and toxic investors, but it is crucially important how relations between founders and investors are built. It's long run, it's 5 or 7 years all together in one board. You will share your money, you will share your failures, you will share your successes. You have to find a touch point just to make your communication comfortable in order to build a better business, in order to build trust. I think it is crucially important for both sides, because without this there is a very high probability that you will come up with a misunderstanding and eventually you will face a conflict, and it is very difficult to overcome it. Let's talk about things that we need to focus on. First is, where did money come from? Sometimes money is toxic, sometimes money is very transparent. So where did your money came from? Well, in Leta Capital, 1/3 of the fund is my private money, because I'm an entrepreneur. I built a company with $100 million revenue. I founded ESET company, which has a very big share on our cybersecurity Russian market. So we've got a $50 million fund. Apart from this, all our investors are private entrepreneurs, self-made. I call them smart LP. So out of the first fund, we make a good exit, and we sold the company from Brightbox to Zurich Insurance Box. And Brightbox companies earn good money and they become a member of my company. So, and actually we have some other cases when people invested into my fund. So our fund has a very clear origin of our money. We are a private fund and we do not deceive anyone. We're not hiding anything. That's why companies invest into us. Is toxic so important while getting investments? So if you don't understand where money came from, then when you will go through governance and compliance, you know, FATCA, if it's PEP money, investment money, so you won't be able to raise any more funds. If it's governmental money, well, some doors can be closed. You need to understand what money are better and what money you should never take. Second very important question is about how do you manage your fund and how do you come up with investment solutions. So sometimes funds are being operated by partners. There are funds with external teams. Sometimes you collect all investors from other funds. What about you? When we talk to our investors, we sell our expertise, our experience, and they trust us. They trust the funds team. So they won't understand if we attract some third parties when it comes to decisions. Because how we can be sure that these third parties are qualified people and they can make right decisions? And company didn't meet them at the fundraising stage. That's why all decisions are being made by a very close circle of partners, of funds partners, and we're quite flexible and we make our decisions on our own. And I think this is crucially important when it comes to speed of work and quality of work, because we are the fund that attracts partners who definitely have a very broad entrepreneurship experience. And well, we have accumulated a lot of things over these 2 years of our operations, and I can tell you that funds that are dealing with public administrations will miss some flexibility. So, and they can change, but you won't change, yes, because it's a long run. It's my fund. It's not a typical construction, but I think that for our market, it has a lot of advantages. Third very important thing is management style. There are funds that strictly control everything. There are funds that are more loyal towards founders. There are funds that are controlling every single step. What do you think about it? Well, we trust our founders, our entrepreneurs, and trust is a better thing to discipline our founders, and it allows us to build right relations. So we are not put any extra bureaucracy, and we're trying to be as much friendly as possible for entrepreneurs. Of course, we're asking them for reporting, but this is a must. First of all, because they have to have it, because if they don't have these statistics or reporting, it's a very big mistake. It's a very big managerial mistake. And if they have this documentation in place, there is no problem to share it with us.
Today you told me that you are a fund that supports entrepreneurs, and that is something that I hear quite often from your fund. What does it actually mean that you support founders? Could you elaborate on that? When I say that our investors want our funds partners to make all of the decisions, that is true. We believe in our founders' expertise, and if we trust them with our money, then it means that we want them to make all of the key decisions. And even if at a later stage, investors will start to play an active role because a startup raised a lot of funding, it still doesn't imply that we will be against our founders. We will stay by their side. Because if a company is destined for success, it will be the founder who will be the key to this success. We have some very interesting questions from our audience. Could you please tell us more about what is a no-go for you when it comes to investing in a startup? Well, if we see a huge capital dilution, then it means it is a no-go. If a business angel's share in a startup company is too big, we won't go there. If we will be offered to invest in, say, 3 startups, we'll choose one of them. Some people come to us and they say, "Tell me what you need and I will make a startup for you." That happens too. And when a market is too small, we won't invest either. I believe that people who invest in venture funds will be interested to hearing your story. At some point, in my company, we had more than 500 people, and when we were hit by the crisis of 2008, we had to work very hard. And I realized that it is time to change, and my company, Leta Group, was divided into 6 companies. And each company got its own head. I gave them all of the leeway, and I suddenly realized that my entrepreneurial skills left much to be desired. So I realized that it was the right thing to do, to divide my company into 6 companies, each headed by a very strong leader who were better at running businesses than I was. A couple of these companies are now sold. I am a board member of some of them. And that is how I realized that I am more of an investor than of an entrepreneur. So I took a pause. I went to the Silicon Valley to, reboost. And I came back with an idea of founding a venture fund. I now had this very clear mission in my head of helping entrepreneurs to build global companies. And why didn't you go for real estate or shares? Why didn't you invest in a fund? Why did you establish your own fund? For all of my professional career, I worked with the IT market. I know how this market works. And maybe a venture fund isn't the best way of making money, though it is not that bad either. Well, as far as your reports are concerned, your results are pretty spectacular, even if we don't count your equity shares. Yeah, you're right here. especially considering the fact that this is my first fund. But my initial thought was not to make money with this venture fund. I was thinking of how I can contribute to the society. And since I myself am an entrepreneur, I love other entrepreneurs. I am very biased in favor of them. I know how hard their life is, especially for Russian-speaking entrepreneurs, because they have to face this crisis, they have to face sanctions and geopolitics. They have to build their businesses against a very difficult background. And if I can be of use to them, that will be very rewarding for them, for me. Thank you so much for this interview, and thank you for having me. Friends, thank you for watching our interview. Best of luck.